Well, good afternoon. Happy Friday, October the 23rd. Mark Milam, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. What's going on with interest rates? Well, this week we've seen a slow decline in mortgage-backed securities. What does that mean? As mortgage-backed securities start to sell off, interest rates slowly start to tick up. Now, really, this has been relatively nominal until yesterday and today. Now, yesterday and today have been much more volatile than we've seen really over the past 3 or 4 weeks with mortgage-backed securities. Some highs, some lows, a lot of intraday movement. Hasn't really resulted in a lot of change, but boy, the intraday movement has caused, I'm sure, some heartburn for bond traders for mortgage-backed securities. Now let me flip the screen around here, show you what I'm talking about. So this is a candlestick chart of mortgage-backed securities. This is the instrument upon which fixed rates are based, and red days are bad days, meaning interest rates are going up. Green days are good days. That means interest rates are going down. So you can see we've been on this slowly declining trajectory over the past couple of weeks. Yesterday and today, those thin lines that are around yesterday and today, as the page refreshes, those will show you the trading range. And you can see the trading range for yesterday and today has been much broader than we've seen over the past couple of weeks. What's that all about? So yesterday, we got some interesting economic data. We got initial weekly jobless claims. They came in 787,000. Now that number in and of itself is relatively meaningless, right? How many of us know exactly what that means? So it's important to put it into context. And the context is we thought we were going to lose 860,000. We thought jobless claims would be at 860,000. We came in at 787, a pretty good chunk of change to the better for jobless claims. Anytime you get positive economic news, it's typically not good for mortgage-backed securities. That means the economy's doing well. It's heating up. Money's moving out of bonds into stocks. You see bonds start to suffer. Interest rates go up. Counteracting all of that, though, of course, is this continued pandemic that we're all living with. And you don't have to be in the financial markets to understand we're far from having a handle on this. The infection rate seems to be going up. The number of cases reported is going up. Now, some of that's because we're testing more, but some of it is because we're heading into colder weather months, meaning people are congregating indoors. That makes the virus easy to spread. And we're seeing that as well over half of the country is reporting an increase in infections. And now they're projecting potentially another couple of 100,000 deaths in the United States by spring of next year. Obviously a huge concern for the country. So you've got these competing forces, right? You've got positive economic news, yet all of this uncertainty affecting not only that in people's health and confidence, also affecting the financial markets. So all of that, what does that mean? It just creates a lot of volatility in the mortgage-backed securities market. It's going to be an interesting week next week, especially leading up to the election. As always, stay in touch with your mortgage professional. If you don't have a mortgage professional that's watching indications like this, you need to get one, especially as it pertains to a home purchase or a potential refinance. If I can help you at all, please don't hesitate to reach out. Mark.Milam@highlandmtg.com, 404-395-1102. Thanks.